Hello and welcome to another update video about VeChain. Yeah, on the VeChain chart, we still have the situation that we had a 5-wave move up of the June lows. Yeah, it's a nice 5-wave move up, but still only a diagonal structure, so we cannot really trust it. It needs to prove itself. How does it prove itself? Well, it basically pulls back in a 3-wave move into support and would then hold the 78.6 Fibonacci retracement level. So far it has done that, but it has not yet rallied above the high of the wave 1. So I want to see a break above the 2.1 cent level to really confirm that a lasting low has been established. Until then, it is still likely to come down lower back into the yellow support area, because so far the move up was not impulsive. So there are a few wave counts that can play out here. So let's talk about them. Yeah, let's talk about the different possibilities we have. And that also shows you why it is sometimes not so useful to really dive into the micro count. I'm going to tell you which count I lean to, but that doesn't mean that has to work out. Okay, so obviously there is only one thing that is really objective on this chart, and that's the Fib levels. And therefore while Elliott wave has a subjective element, it is also very, very objective in providing us with the levels where a setup will fail. It doesn't really matter so much in which sub-wave we are at the moment, or because oftentimes it changes anyway, but it doesn't matter so much. What matters much more is that we have a 5-wave move up of the June low. We're watching the bullish support level, which is the 1.51 cent level. We know that if it breaks, the setup is likely going to fail and we will break below the June low. So you can work with that. Yeah, you can measure your position size based on that bullish support level. You can set a stop loss, and you can wait. Yeah, I don't see any good edge here where we are right now. Yeah, I don't see any good advantage from an Elliott wave point of view. There was an edge when it hit the trend reversal area here on the 10th of July, and it worked out. Okay, but let's take a look at the wave counts. Let's talk first about the most bullish wave count here. The most bullish scenario. In the most bullish scenario, price moved up in 5 waves, and we count that as a wave 1. It came down into support in the orange, so the orange count is the most bullish one, in the orange wave 2, and already bottomed in wave 2, and we formed the wave 1 to the upside. We're currently coming down in a corrective way in a wave 2. It should somewhere here find support. By the way, the red zone is just resistance, breakout point, but don't disregard that for now. And we could then rally in a third wave afterwards, but it must hold the 10th of July low of 1.8 cents. Then we should get a 4 and a 5, and then we have the next 5-wave move up, then I get a 3-wave move down, and it takes off. I don't really follow this count too much. It is a possibility, but the move up of the 10th of July low was only in 3 waves, so I do not trust this wave count. So that is certainly not my primary scenario, but it is a possibility. Then we've got a count where in yellow, yellow count suggests that price came down off the wave 1 high, which was made on the 1st of July, only in an A wave, the first wave of a 3-wave correction in a wave 2. We rallied in a B wave into resistance. It reacted to resistance, and we're coming down in the C wave. I would prefer that count, but the move down isn't really impulsive. It's very stubborn, very slow, and really is fighting with that C wave. That's the count I prefer. It would be the cleanest and the clearest wave count. And we could test the yellow box a little lower, possibly at 1.73 cents and 1.64. If we break below the ascending trend line, I think we have a confirmation for this, okay? But until then, the orange count is possible as well, but I don't really believe the orange count. There's one more which I find fairly likely, and that is the white wave count, where, yes, we came down in an A wave, but it is forming, so the B wave didn't top here on the 13th of July. In fact, it's forming a larger B wave in 3 waves and would then come down in a C wave. This is one of these typical fake out rallies, would be a fake out structure. It often happens So if I had to give you my view, my primary count is the yellow one where we come down more directly, but also here not in a straight line. So it will likely maybe make a lower high and then come down. But that would need to be confirmed by a break below the ascending trend line. We, by the way, also then have a head and shoulders pattern here. The second most likely count would be the white one with the higher B wave and then come down. And for me, the least likely one, which however is also not unlikely, yeah, all the counts I show you here are likely, that would be a direct breakout. So I wouldn't even show you the unlikely ones. I've already done the work and taken out numerous wave counts which are not likely. So the problem is now you have 3 wave counts here. That means here where we currently are, we don't really have an edge. We don't really have a great trade setup, in my opinion. I think we have an edge again and good reward to risk should price drop lower again, because then we have a really good reward to risk ratio. No? I think that's sort of, or when it forms a larger B wave and we see the first 1-2 setup down as a short trade maybe. Yeah, but that's sort of my view about VeChain at the moment. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.